Well, Warren Harris, MD and CEO at Tata Technologies, now joins in to talk to us about what business is and what the key triggers for the company are. Hi, Warren. Good morning. Thanks for joining us. Warren, you're in an industry which has that much-needed momentum but still grapples with volatility. How are you coping? Is the outlook looking better today than it did, say, in the early part of this year, or are things tough?
Sure. Yeah. As far as the momentum in the industry is concerned, we're not seeing any tapering of demand. I think there has been a slowdown in EV sales, but we're in the business of investing with our customers in future products, and certainly demand continues to build. So we're excited about the direction that the industry is taking. We're excited about the contribution that we're making, and the biggest challenge that we've got at the moment is capability and skills, and that's why we're investing all over the world, and specifically in India.
Interesting, Warren. So you have supply side concerns. While demand is looking very robust at the current times, is that what you mean?
No, the demand, I think, is very robust. Despite the fact that that growth in EV sales has started to plateau, the growth is still very much there. There was 14 million units that were sold last year. This year, the industry, despite the headwinds in places like the US and certain parts of Europe, is still expecting to sell some 17 million units of electric vehicles, and so that translates into almost 1 in 5 vehicles that are sold today will have some form of electrification. And if you project to the mid 2030s, we expect that to transition to about 1 in 2 vehicles sold will have some form of electrification. So the industry is very much pivoting, not just to electrification, but also investments in software-defined vehicles and in autonomy, and that continues to provide tailwinds for organizations like ourselves. The big challenge that I think we're all grappling with right now is the availability of relevant skills, and so we are investing ourselves in building the type of capability that the industry is going to be needing.
Interesting. Warren, how are you placed as compared to your global peers? I know you have your strengths, but there are players who've been around maybe longer than a Tata Tech, and then there is, of course, a geographical bias too. How do you deal with increased competition and geographical sort of biases?
Well, if you look at our EV journey, it began in 2010. Mr. Tata challenged us to put together an electric vehicle technology demonstrator that was as frugal from a pricing perspective as the Tata Nano, and we revealed that vehicle at the International Automotive Show in Detroit in 2012, and that was the same show that Elon Musk revealed the Model S. So we've been part of the EV journey almost since the outset, and we partnered not only with group companies like Tata Motors and JLR, but also progressive organizations like NIO in China, Polestar in Scandinavia, and we've recently, as many people will know, have helped VinFast launch the 2 SUVs that we took turnkey responsibility for. So, although we are very proud of our heritage in India and the nexus and capabilities that we have there, we're very much a global company, and we have sites and teams that are very close to our customers in different parts of the world. And I think that footprint, that coverage model, combined with the experience that we built up now over the last 14, 15 years, I think is really informing the type of confidence that our customers are extending in us.
Warren, one of the easiest ways to scale up, and since you have supply side concerns, is acquisitions locally or globally. One may argue that the better way to do this is either organic or through partnerships, which you've committed to recently. Anything that you're eyeing to build up your supply side, supply side quickly?
I think we're open to both organic growth as well as targeted acquisitions when they make sense. If you look at the history of the company, the history of the company has been informed by three relatively large acquisitions. There was the acquisition in 2005 of the company that I was a part of, Incare International, and we followed that up with investments in a company called Cambric in 2012 and a company called Ascenda in 2017, 2018. So the organization has demonstrated its appetite for acquisitions when it's made sense. But we've typically done that thoughtfully, and we've focused as much on capability and customer acquisition, as well as the cultural alignment between ourselves and the organizations that we've brought in. So we're very much open to complementing the investments that we make organically with acquisitions when they make sense.
There's no better time than now for it to make sense, right? Then I'd imagine that you would be eyeing a company, there is conversations underway. Give us clarity, because the environment, like you've mentioned yourself, is very robust.
And you're absolutely right. I think the fact that we're now a public company, we have a balance sheet that is debt-free. We have a very healthy cash position on that balance sheet. So we are primed to be able to pull the trigger and make acquisitions again when it makes sense. But we're always going to be thoughtful. We have a list of candidate targets that we are evaluating, and we will act with some conviction as and when we believe that the target acquisition will be right for us.
Warren, is the VinFast overhang finally behind you? No more downside expected from them? And also, was this a VinFast specific account problem, or do you feel like this could be seen, or have you seen this across other clients as well? Just want to get a sense whether this is really restricted to one company or a sector as a whole.
I think if you look at our customer base, it's a mix of traditional OEMs and associated supply chains, and it also includes new energy vehicle companies like VinFast. I think with new energy vehicle companies, we have the opportunity to demonstrate the end-to-end capabilities that we represent. And with VinFast, we took the entire responsibility concept through the launch of the two SUVs that we were responsible for, end-to-end. And so, we will continue to expose ourselves to that side of the market, because a lot of thought leadership and a lot of innovation is coming from those types of companies. But those companies follow a very specific kind of life cycle. They invest in new product, they then build product, they generate demand, and based upon their ability to be able to sell product, they then invest in follow-on products that will enhance and build out their portfolio. We expect that to happen with VinFast. They've launched now 4 SUVs in the last 12 months. They are generating demand in different parts of the world, and I think if they're successful with satisfying that demand, there's no question that they will invest in follow-on vehicles and capability. And given the success that we've enjoyed with that organization and through that partnership, we would expect to be part of their future plans. I think one of the things that I'm very proud of is the fact that despite the fact that we've had material runoff at VinFast, we've managed to backfill that. I think I've commented in the past that last year, outside of VinFast, we grew the business by 30%. The runoff is, as you mentioned, largely behind us. We expect to return to sequential growth in Q2 and beyond. And we have not seen any softening of demand outside of VinFast in any of our other customers. And so we're very bullish about the continued momentum that we are building inside of the company.
Well, one of the concerns when you were listing as well was that Tata Tech has a very concentrated portfolio. Have you managed to change that around? Because we've seen the fallout of that through VinFast, right? Does your portfolio look a lot more diversified today in terms of client base?
Yeah, I think if you look at some of the announcements that we've made in the last 6 months, we've announced the partnership with Agratas. At that partnership advances our capabilities upstream as far as the EV value chain is concerned, to include now pack design. We're also going to get involved in the industrialization of the 2 gigafactories, one in Gujarat and the other in the southwest of the UK. We also announced, I'm sure you'll be aware of the partnership with BMW. BMW came to India, evaluated all of the candidate ER&D organizations, many of which had incumbent relationships with BMW, but they made a decision to partner with Tata Technologies, which we think is a testament to the breadth and depth of our capabilities, particularly in software-defined vehicles. But we also think it's a testament to the attractiveness of the value system that underpins the Tata Group. And so I think those are 2 very high-profile examples of the diversification that we're affecting as far as our customer base is concerned. And we'll continue to be very focused upon a small number of very strategic partnerships that we build with our customers, because the type of proposition that we represent requires a level of customer intimacy that cannot be extended to 100 companies. So we believe that our ambitions in terms of growth are predominantly going to be satisfied by focused relationships with between 20 and 25 customers.
Just a quick word on the Nifty, and there's been a little bit of improvement. The Nifty and the Sensex both have recovered from the day's low point. The Nifty at its day's high, and the Sensex now marginally trying to fight its way into positive territory. We'll wait for it, but the Nifty now not looking as bad as it did at 9:15 this morning. Warren, we were talking about these deals and these strategic relationships that you've gotten into with the likes of a BMW. What's the average time horizon and payment cycle or life cycle of these relationships?
There's no kind of there's no life cycle that defines all of our. There's no standard life cycle that defines all of the relationships that we have with our customers. Some relationships take a while to build. Customers will test us in terms of capabilities. We will build relationships with the leadership team. Confidence will grow, and that will inform the scale that we will then drive jointly between ourselves and that customer. Other relationships like BMW will start from a position of no history between the 2 organizations, and given the strategic intent of that customer, they will scale very quickly, and that's what we've seen with the work that we're doing with our colleagues in Munich. So there's no one size fits all, but I think the characteristic that we really look for is customer intimacy and strategic commitment between the leadership team. When we are entrusted with next generation product, we're being entrusted with the family jewels of that organization, and so it's imperative that we build relationships that represent a commitment from us to our customer, and just as importantly, a commitment from the leadership of our customer to Tata Technologies.
And Warren, very lastly, because we are short of time, but is there a good chance that you will outpace the growth you deliver in FY24?
We don't provide specific guidance, but we continue to be optimistic about our prospects for growth this year and beyond. So, the momentum inside of our organization continues to build.
Warren, thank you very much. You have a good trip to the US, and we'll hopefully see you back in the city at some stage later.